Hey, what's going on, guys? This is Benny Childs, founder of the Teach Me to Fish Effects community. I also go by the Forex Pastor. Hey, I'm coming to you today because I want to show you what I perceive to be the most simplest Forex strategy there is. Now, I myself call this strategy the 50-50 strategy. All right, and I like to liken Forex or trading Forex uh, to the lottery. The reason why I say that is because Forex is not guaranteed. Okay, all right, there are no guarantees in Forex, just like the lottery, and so you're kind of you're making a gamble. However, the difference between Forex and the lottery or gambling is you're making well, you have the capability of making an educated guess that can 90% of the time go in your favor. Um, Now, those 90% win rate strategies, they're a little bit more sophisticated, but anyone can learn them. Anyone can learn them. Listen, if I can learn them, you can learn them. But this video is for those individuals who are fresh in Forex and you're looking to start making profit now. So I want to show you this, and I call this the 50 strategy. All right, and I give honor where honor is due. I want to pay homage to my man, one of my mentors in this Forex game, Mr. Yusuf Scott, founder of the So Darn Easy Forex movement. And I ran across his video, and he titles this his always win strategy. So big shout out to Mr. Yusuf Scott. But again, I call this the 50-50. I call it the 50-50 strategy, and I want to go in a little bit more in depth with you guys to show you how to do this. Now, simply what you're going to do and what I recommend doing first is at 5 p.m. Eastern Standard Time, go to your terminal. All right, 5 p.m. Eastern Standard Time, go to your terminal. And the market resets, or it starts over, or it opens back up at 5 p.m. Sunday through Friday. All right, Eastern Standard Time. Well, really on Sunday at 5:30 p.m. Eastern Standard Time, but Monday through Friday, 5 p.m. Eastern Standard. Well, Monday through Thursday, excuse me, 5 p.m. Eastern Standard Time. The market opens back up. Fridays, it closes at 5 p.m. Eastern Standard Time, and on Sundays it opens back up at 5:30 Eastern Standard Time. So you're going to go to your terminal Monday through Thursday, okay, at 5 p.m. Eastern Standard Time. And what you're going to do is you're going to come over here and you're going to set your lot size to the smallest lot size possible. And that is the 10-cent lot size. All right. And once you do that, what you're going to do is you're going to click sell. And then immediately after that, you're going to click buy. All right. You're going to click sell and you're going to click buy. And what that's going to do is that is going to open up a sell order, and then it's going to also open up, change this color, it's going to also open up a buy order for you. So now you have two orders open at 10 cents each. Okay, and so right now the market it will be going in between these two orders. All right, so you'll be sitting at a negative amount, based on the spread. And I recommend doing this if you're just starting out. I recommend doing this with the GBP USD pair. The reason why I recommend going with this is because it is the most volatile pair with the lowest pips spread. Okay, and that's a 3 pip spread. And so that's why I recommend doing this with GBP USD. You can do this with any pair, but Um, again, I choose to do, I say do it with this pair because it has the lowest pip spread and it is the most volatile out of the pairs with the lowest pip spread. And so basically, you're going to have these two 10-cent orders open. Okay. And you're basically, excuse me, you're basically doing this because you don't know which way the market is going to go. You don't know if the market is going to go up. You don't know if the market is going to go down. So therefore, you just prepare yourself by putting in two trade orders at 10 cents. Now, what you're going to do is once the market starts going in the favor of one of these two orders, you're going to place another order at your desired lot size. And excuse me. And you want to make sure that you're practicing proper risk management. Okay. All right. So what I recommend doing is waiting for the market to go anywhere between 25 to 50 pips in the favor of one of these two orders. And the reason why I say that is because typically the market will go in one direction 25 to 50 pips before it'll turn around. So I highly recommend just waiting for it to go past 50 pips or 51 pips, waiting for it to go past 50 pips before you put in your final or your true order. All right. And that's just part of being patient. Okay. And that's just a part of making sure that, you're going to be in the money for a while. Once the market goes in the favor of one of these two orders, 50 pips, then you want to put in your real order. So let's say the market it turns around here. Let's just I'll just back it up here. Give me 1 second. Let's just say that we came in at 5 p.m. on this day. And we put in our sell, and then we put in our buy here. All right. Now we see that the market on this day, it kind of was going in favor. It would have been going in favor for your sell order. All right. And then it quickly turned around and it started going in favor of the buy order. And so let's say if you'd have waited 50 pips, all right, so you'd have waited at this point right here. Here's the 50 pips. Yeah, there you go. If you'd have waited to this point right here and then put in your buy order at your higher desired lot size, you're looking at a gain of possibly 278 pips. All right. And let's say if you were trading at a $1 lot size. So that would have been a $278 win for you. All right. Let's say if you were going at a standard, which is $10. All right, that would have been over $2,700. Okay, and all you simply did was at 5 p.m. you came in and you put in a sell and you put in a buy order, waiting to see which way the market was going to go. You waited for the market to go 25 to 50 pips in the favor of one of these markets. All right, and you gained 278. All right, and so what's going to happen is you're only going to be out of the money based on the difference of these two orders. And so that's why we put them in at the lowest lot size possible, which is 10 cents. And so you're looking 10 cents plus the spread. So you're looking at that 10 cents plus the spread, which is 13 cents times 35. 35 times 0.13. you're looking at you're out $4.55. All right, and so we were at what, 27.80 minus 4.55. So you're looking at a $2,775.45 profit. All right, so I call this the 50/50 Forex strategy. Again, it was introduced to me through Yusuf Scott. He calls this his always win strategy, because you will always win during the strategy. Now, if you don't want to give up the $4.55, I encourage you to learn some more. You can call it sophisticated strategies, but they're not that difficult to learn. All right, Forex is not hard. I'll tell anyone, Forex is not hard. It's just like with anything else. You just have to get used to it. You just have to be patient, and be patient with yourself, number one, because many people will get in the Forex market and you have these high expectations. But it's just like going to school. You spend anywhere between 2 to 4 years, in college, learning a trade, learning an industry. All right, and so when you're 6 months in, you can't necessarily be expecting to be a millionaire. Now you can, if you're able to invest into some of the higher programs out there. But a lot of which I will tell you can find on YouTube. But again, guys, I hope that this has been an encouragement to any and everybody who's looking to get in the Forex market, who's looking to open up another stream of income. I hope that this video was clear and concise. And just in case if it wasn't, I just want to go over again what it is that you're going to do. At 5 p.m., you're going to go to your terminal. All right, you're going to set your lot size at the lowest lot size possible, which is 10 cents. You're going to put in right after one another. You're going to put in a sell and a buy order. All right, and then you're going to wait for the market to go in favor of one of those orders. At least 50 pips is what I recommend. That's just my recommendation. All right, and once that market goes in that favor, then you're going to come over here and use proper risk management, and you're going to put in the higher lot size, and then you're going to allow that to ride up. Now, if you're interested in knowing how long you should allow it to ride, or what signals to look for, so that you'll know how and when to get out of the market and take your money, I strongly recommend my community, the Teach Me to Fish Effects community, where I not only have instructional videos for you guys to watch and go through, but I actually coach you on a week-to-week basis. And then I also offer one-on-one meetings with you guys, where I will answer any questions you have, trade with you. I trade live with my group. But again, I just want to give back, and I just want individuals to know that there's a way out. There's a way out. There's a way out. It may be an individual who you're scratching your head trying to figure out, where you can make gains at and make some investments. And I say invest in yourself. And the Forex market is a really good tool to use to invest in yourself and generate what I like to call generational wealth. All right, guys. So again, I pray that this video has been simple enough, comprehensive enough, and straight to the point. Feel free to leave your comments. Feel free to interact with the video. Let me know, just let me know how you feel about it. Do you think this is something that you can do? Do you feel like I could have explained it better? And if so, I'll come back and I'll explain it the best I can. All right, guys, as always, until next time, happy pip fishing. And if you stay in God, you will stay in control. Be blessed.